I'm George Ratiu, Manager of Economic Research with Realtor.com. We are in the latter part of summer, soaking up the sun and longer days before schools reopen and vacations wrap up. Economic indicators posted brighter signs this week, even as recessionary concerns continue to color the outlook. The big news of the week came from one of the main measures of inflation, the Consumer Price Index, which rose by a relatively slower 8.5% in July from a year ago. Prices for energy fell, while the cost of housing and food moved higher. Core inflation remains steady. The shift in consumer prices was also echoed by producer prices, which experienced the first slowdown since the brief 2020 recession, even as they remained almost 10% higher than a year ago. With easing inflationary pressures, small business owners' confidence rose in July, outpacing market expectations as many companies see better business conditions in the next 6 months. However, for most, inflation still remains a concern. This worry is showing up in a cooling employment market. While job openings continue to outpace people looking for work, companies are taking a more cautious approach to payrolls. Jobless claims rose again this week. The overall positive signals had an impact on capital markets, with the 10-year Treasury rising along with mortgage rates. Freddie Mac's average 30-year fixed rate jumped back above 5% this week. On the housing front, Realtor.com's July data spotlight a market continuing on a path toward rebalancing. The inventory of homes for sale increased solidly in July, moving near levels not seen since mid-2020. With more available properties and less competition, sellers are beginning to adjust to the new reality by cutting prices to incentivize buyers. The share of listed homes with price reductions reached 19% in July, closing in on levels we haven't seen since 2017. Moreover, median prices retreated from June's record high as the pace of growth moderated. Meanwhile, our weekly data show that homes are taking longer to sell in August than they did this time last year. These shifts are a welcome change for buyers who are still in the market. The upcoming fall season may offer an even better window of opportunity. Interestingly, the latest Realtor.com cross-market demand report finds that with high prices and hybrid work availability for many people, shoppers continue to search for their new home in a different city or across state lines, especially in the more expensive Northeast and West regions. Enjoy the last stretch of summer. We'll keep you in the know at our website and Twitter feed, and also in next week's video update.